Insurance is one of those things that can be really, really tricky, especially if it's for your business, like commercial insurance. So I'm Simone Kason. I am the owner of Canis Capital Insurance Firm, and I'm so glad you guys came in. Make sure you hit the subscribe button down at the bottom so that you can know when I'm coming on and when the rest of my team is coming on. So today I'm going to be talking about the differences between certain types of insurance. And we're going to especially talk about umbrella insurance and excess insurance. And so most of the time, a lot of the time, people that are not necessarily insurance professionals will use these terms interchangeably, and they are not. They are not. There is a difference between umbrella insurance and a difference between excess insurance. And so I want to talk to you about what those differences are. Now, umbrella insurance is utilized so that it can be broaden the scope or the coverage or the inclusions or whatever of the policy that it's over. So let's say that it's over a general liability, right? And so the general liability will have forms listed. Those are going to be things that it's going to include and things that it's going to exclude. So someone may go in and look at an umbrella policy to broaden that, right? Umbrella policies are going to have their own deductibles. They're going to be able to broaden the scope of what actually, if something was covered. So let's say you have a general liability and it does not necessarily cover for damages outside of the building or whatever. Let's just say that. And so this umbrella insurance can be able to kick in to broaden the scope of what it's actually covering. So maybe it will include, but it's going to actually list what it is and what it isn't, all right? Excess insurance, excess liability is pretty much just an additional dollar amount. So what that means is that you have your general liability, but let's say your general liability is $1 million in incurred, $2 million aggregated. And so that means that for every occurrence or every incident that happens, the insurance agent, the insurance company will pay up to $1 million per that occurrence. You would be able to get 2 of those occurrences because it will pay up to $2 million, right? If you got them, if you max them back, both out. But regardless of whatever, it'll pay up to $1 million, and then $2 million is the maximum aggregated all year, right? So 1 year policy, most property and casualties are going to be 1 year. So you'll be able to do that. Now an excess policy may be $1 million and $1 million. So that excess policy is going to say, hey, listen, we will do an additional $1 million, which would bump that incident up to $2 million. And then in addition to that, we will do another $1 million on the $2 million aggregated. So but the key to this is that excess liability does not go against whatever it is, whatever is the underlying policy. So it doesn't broaden the policy. It doesn't make it cover more stuff. It only gives more money. So make sure that if you are looking at getting additional coverage, if you want to be safe, make sure that you understand, and the person that is selling to you understands the difference between umbrella and excess. Those are 2 different policies, oftentimes interchangeable, but mean 2 different things. If you are looking for commercial insurance, make sure you go to Canis Capital, www.caniscapital.com. Also, I want you to hit subscribe so that you can know when me and my friends are going to be coming on. We will be talking about everything from insurance, protecting your capital, how to be able to do business credit. We'll talk about all of the 5 industries that we cover, which is going to be the green industry. We'll also be covering craft beverage, hospitality, and of course, one of my favorites is professional athletes. So make sure that you tune in. You do not want to miss this. I'm looking forward to seeing everybody soon.